have Neeraj Chadawar, Head Fundamental and Quant Research at Axis Securities, joining in. Neeraj, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit. My first question coming to you is, you have released a report in terms of the way you're looking at Indian markets going ahead. Taking growth into consideration, the economic policies, if you have to look at what RBI has done so far, and the inflation and GDP expectation with earnings, if you have to sum up all of this along with the global headwinds, your one statement that you would have for Indian markets.
Thank you for having me here on the show. As you rightly pointed out that there are a lot of positive which has been built up in last 3-4 months. What we believe that at this juncture, the growth prospect for FY26 in terms of economy are better as compared to FY25. So the government and the RBI is building the pro-growth narrative in which the RBI is supporting in terms of CRR cut and 100 bips of front-loading the rate cut. Along with that, the consumption boost given by the government. So what we believe that there are better days for FY26 as compared to FY25. Most of the earnings related concerns are already in price. Going forward, slowly and gradually, we could see earnings revival, and second half of FY26 likely to be very better. So here, very important parameter to look at is that the upcoming earnings season is a very critical at this juncture. So in that regard, management commentary and the guidance are very vigilant. On top of that, the ongoing scenario of US-India trade deal is remain vigilant. If these two events materialize as per the market expectation, we could see in next 1 or 2 quarter market is heading towards the newer high.
Hi Neeraj, this is Anushi joining in as well. Now, we have seen the geopolitical tensions subsiding, or what was the scenario in the April month that we've seen. Considering that factor, now, while that has eased out, it's the small caps and the mid caps which continue to remain in focus. They have gained significantly this last 3 to 4 months. Just want to understand from a stock specific side scenario as well, what is the kind of growth picture that you expect as compared to FY25?
So in total for Nifty 50, I am expecting almost 10.5% of EPS growth for FY26. So what we believe that at this juncture, the chances of EPS surprises on a positive sides are very higher because growth could surprise from the external sector. So at this moment, our focus remains on the domestic economy, focus remains on the large cap private banks, consumption, certain plays in consumption, hospital, interest rate proxies. What we believe that these counter will continue to deliver solid number. On top of that, the capex oriented theme is slowly and gradually emerging because in Q1 it will set the stage for further growth in FY26 because last year, exactly 1 year back, it was the election year. The base is very low. So this year, all those capex oriented theme could surprise on a positive side, and slowly and gradually right now 50% of the sectors are contributing to the Nifty rally and mid and small cap rally. Remaining 50%, we could see there could be a wait and watch mode in terms of how the export demand picks up, as you rightly pointed out that more towards the how the macroeconomic situation pans out. So for at least for 1 or 2 quarter, all the export oriented theme will be in a wait and watch mode. More orientation will be towards the domestic economy, and that is showing the resilience. And on top of that, guidance is very critical because the consumption theme has not seen a good amount of pickup in last couple of years. And right now the recipe is right. It need to be converted into the numbers. So slowly and gradually, 1 or 2 quarter later, it likely to be converted into numbers. So that is the reason the retail, the selected FMCG, the travel and tourism remain vigilant for the remaining part of FY26.
So Neeraj, taking into consideration the way markets have rebounded since March 2025, strong up move, and you clearly have the broader markets which have outperformed your Nifty. Where are you seeing risk reward favorable between mid cap, small caps versus your large caps?
So I would point it out in terms of themes. So interest rate sensitive is the right theme. We need to identify the pockets. So we continue to believe in the NBFC universe where the interest rate, the NIM expansion story is very important, and it will remain vigilant in next couple of quarters. On top of that, the real estate proxies are very, very important. And at this moment, the recipe is right for real estate. On top of that, the rural economy is slowly and gradually reviving. And monsoon till now is good. We need to see the special distribution. But this year, there could be a strong chances rural-oriented theme could outperform the market. That is the reason we continue to bet on the two-wheeler space, and Hero MotoCorp is our top picks in the rural space. In interest rate proxies, we continue to like Bajaj Finance, Shriram Finance, and the real estate space, we continue to like Prestige State. On top of that, one theme is very important to look at is the telecom theme, which is very negative, very small impact due to the trade tariffs. It is a very, very solid theme. One need to look at that right now. The entire telecom industry is in a very solid space. We continue to see the ARPU improvement story, and the top two player will continue to focus on the conversion of 2G player to a 4G player. And we continue to see, and that's the reason we are betting on Bharti Airtel, which is our top picks. And that will continue to hold performance going forward based on the ARPU improvement story.
Okay, Neeraj, so that's the some of the pockets that we should be focusing on. But want to get your sense on the Nifty 50 also, your targets for that. You've outlined a bull case scenario as well as a bear case scenario. Just want to get your sense on either of this direction moving in towards that, since you've considered that the market breadth has been on a positive side. So just want to understand both of these case scenarios that you've pointed out.
So in base case, we are targeting 26,300. We are valuing Nifty at 20x. What we believe that in next 1 or 2 quarter, the re-rating chances are very limited. Rather, it will be a bottom of stock picking with the opportunity of earnings growth. Market will continue to follow the earnings growth. In the bull case scenario, we are awarding 21x multiple, in which we believe we target Nifty March 26 target at 27,600. In bull case scenario, there will be a soft landing in the US market, and all the export oriented theme will come back with and start showcasing the earning growth in the later half of FY26. So what we believe that most of the negatives are already in price. Most of the uncertainty related to trade is already behind us. Going forward, slowly and gradually, we could see the recovery in the market. But for the next 1 or 2 quarter, it will be a bottom-up stock picking market. But once we gradually enter into Q3 FY26, it will be a broad-based rally possible, and mid and small cap could deliver a double-digit return from here onwards. But till time, it will be a stock-specific rally.
Interesting to watch out for in terms of the March 2026 target that you have. But thank you so much, Neeraj, for joining us on the show and sharing your views.